Hi everyone, it's me Socrates again. I am so excited to be able to share with you in this video a wonderful and a powerful spreadsheet that I have developed 2 years ago to assist with budgeting and financial management. Throughout the past 2 years, I have rigorously tested out this spreadsheet to accommodate for all the complexities that we deal with in terms of our finances on a day-to-day basis. And today, after many revisions that have been made to the spreadsheet throughout the past 2 years, I am convinced that this spreadsheet is at a point where it is now ready to be published for the world to use. I hope everyone finds this spreadsheet and video tutorial very helpful, and I hope that everyone can really benefit from this. Whether you already have a way to manage your finances or if you don't have anything to manage your finances yet, wherever you're at, I think this spreadsheet is comprehensive yet simple enough where anybody at any point in their lives can really get started on this. So I'm aware that there are a lot of budgeting apps out there that you can download to help manage your finances, but I think at the end of the day, nothing beats the old classic spreadsheet. The spreadsheet was made to be simple, yet comprehensive enough to allow everybody the flexibility and also be able to effectively plan their budgeting and, of course, their financial management in general. So a quick story about how this spreadsheet came to be. 2 years ago, I graduated from undergrad and I was about to enter the workforce, full-time salary job. I just bought a new car, so I had to pay that off. So I had a bunch of things, heading my way, like a whole new life ahead of me right there like that after I graduated. And, with my salary and of course with these monthly bills to pay off, especially the car, I was like, okay, I gotta really figure out a way to effectively plan this because of course, with all this sudden influx of new money from the salary job, right? You might be able to lose control and overspend. I might be spending a lot of money on food and burgers every single day to the point where my take home at the end of the month every month will be zero, right? And that's bad because, at that point we'll be out of money. So that's how I first started the spreadsheet. And of course, throughout the next 2 years, I figured out some flaws with the spreadsheet. I fixed it up. And then from there, I was able to pretty much plan how long it will take me based on how much I'm planning to pay per month in order to pay off my car. At the end of the day, the spreadsheet works. I was able to track all my finances for all the different expense categories that I created for myself. Every month, I was able to see what I was overspending on, what I was probably under on, where I could kind of reduce the budget a bit. So I was able to get an accurate representation of what my I'll say life circumstances are, right? How much money am I paying per month on food? How many burgers am I buying all the time? This video tutorial will cover the basics on how the spreadsheet works. And then after that, we're going to go ahead and get hands-on with this. We're going to use the spreadsheet with real life examples so that everyone can see how helpful and how powerful the spreadsheet can be to help you track your finances and of course, your budgeting as well. The best time to get started on the spreadsheet is right when you get a full-time salary job or when you have some type of constant income coming in. But even if you don't have a constant income coming in, you can still use the spreadsheet to help you plan out your expenses and set a budget for yourself and see how well you're going against that budget. And then once you get a full-time job or some type of income, you can crank in the numbers and then the magic will go from there. And also feel free to modify the spreadsheet to your needs. Again, this spreadsheet is meant to help you, but if certain portions of the spreadsheet aren't helpful because you don't use them or you just don't like how it looks and you just want to move things around, feel free to. Again, this is all in Excel. You can do whatever you want. At the end of the day, I'm just so happy because this spreadsheet works. For the past 2 years, I've poured my heart, my soul, all my life experiences and observations and putting everything I got into this spreadsheet to make it the best that it can be to not only be helpful for myself, but helpful to other people out there as well. And as long as it helps somebody out there, I'm a happy camper. So, I wish you all the best. If you have any questions about how the spreadsheet works or any questions in general, or if you just want to leave a comment, feel free to leave a comment in the video. Or feel free to leave me a message and I'll definitely get back to you. Welcome everybody to the Advanced Financial Management presentation. I'll be talking about the budgeting plan and long-term financial projection spreadsheet. The objectives are the following: to effectively perform budget planning on a monthly and on a yearly basis to help plan for short, medium, and long-term financial goals. To effectively track a wide range of expenses, such as monthly utility bills, rent, and paying off loans, such as for your car. Effectively track cash transfers between bank accounts and to and from stock brokerage accounts. Provides you the flexibility to adjust your monthly budgets for your expenses as needed throughout the year from an analysis of your previous month's actual spending performance against your projected expenses. Provide you the tools to track the total amount of money in your different bank accounts along with your contribution amounts to stocks. Provide you the tools to explain any spending deviations from projected budgets. The limitations of the spreadsheet are the following. It only tracks direct transactions to and from your bank accounts. That means that cash payments are not tracked and must be tracked separately. Balances in other platforms are not tracked, such as for PayPal and Venmo. The spreadsheet does not track your current total stock value, including your retirement funding value, such as for your 401ks. It only tracks how much you have contributed to your stock brokerage account. An example is that the spreadsheet tracks that you have contributed $10,000 to your stocks. However, you're going to need to refer to your stock brokerage platform, such as Robinhood or TD Ameritrade, to see the actual live value of your stocks, such as $10,000 went to $16,000 in value, or $10,000 got reduced down to $7,000. Projections on when a loan will be paid off needs to be tracked and calculated separately. An example is calculating how many months it will take to pay off your car. I'll talk more about how to do this in a later slide. The default design of the spreadsheet formulas is based on bi-weekly pay and being paid twice a month. The spreadsheet formulas will need to be manually adjusted to account for the few months in which you are paid 3 times a month instead. The final point is to adjust the spreadsheet to suit your needs and preferences. So here's a brief overview of how the spreadsheet looks like. We're going to get into details on how each columns and how all the rows work, and then after that we're going to go into some live examples. Planning. 1. We're going to input the total amount of money currently in all your individual bank accounts. On the very top. Step 2, we're going to input our paycheck amount. A quick note is that the yellow highlighted box is where you're going to input your values. Next, we're going to list all the expense categories for every month for the year. Groceries, gas, utilities, bills, or rent. We're going to list the corresponding budgets for each of the expense categories, baseline and projected columns. We're going to input the expected total transfer amounts to and from your different bank accounts and stocks. This spreadsheet accounts for 4 different bank accounts. Usually a lot of people only have a checking and a savings. That's 2 accounts. But I made this spreadsheet to give you the flexibility in the case where you do have more than 2 accounts. You can name them whatever you want. Execution. As the month progresses, you're going to track your spending and transfers to and from your other bank accounts and input every individual transaction into the corresponding expense categories you created. That goes in the actual spending column. The remaining budgets and transfer differences are shown on the right side. It's automatically calculated for you. The total spending, transfers, and savings are calculated at the bottom. The total bank account amounts and stock contributions are calculated at the bottom. So pretty much all you have to do is just input your expense categories, the budgets you set for them, and just have to input the individual transactions for each of those items as the month progresses, and everything else from the spreadsheet auto-calculates for you. You'll be able to add comments on the right side to explain any expenses or deviations from the budget. For example, if you somehow spent a super large chunk of money one day, you want to add a comment about why that happened, what you did that day, such as, oh, I went to go to the bar with friends and I ended up spending $50 for everybody's drinks, something like that. Next is baseline versus projected amounts. Knowing the difference between these two is very important and very critical to making this spreadsheet work to the maximum potential. The baseline amount is used for planning at the beginning of the year. Once the budgets are established in this column for the entire year, leave these values alone as you progress through the year. Projected amount is used for monthly planning. You adjust your budgets per month as needed based on the previous month's spending performance. A good example is for food. For your baseline amount, you would assume that food, your budget will be around $100 for all 12 months. However, you notice that consistently through, let's say after 3 months into the year, you've been spending $200 instead of $100 of your original food budget that you put in your baseline amount. Therefore, for the projected amount for the following month, you're going to increase your budget for that month and say all the future months afterwards to $250. The actual spending are the amounts you actually spent for each expense category, and it's taken as the summation of all individual transactions. The formula is very simple. It's just equals sum and then all the individual numbers added together. The remaining budget is the difference between projected amount and actual spending. It's all auto-calculated. A positive number here means that you're within your budget, and a negative number means that you went over your budget. In a separate tab on the Excel sheet, all your overall data is summarized and graphed in the following chart. You can see that all your total bank account amounts for each month are tallied up, baseline projected actual, and also total savings are charted as well. The chart to the right is pretty straightforward. It's a bar chart showing all baseline projected actuals, and then in the very bottom it shows all the tables and all the values corresponding to each bar. Another useful graph in that same tab is the baseline projected and actual chart, which shows in stacked columns all four of your bank accounts along with your stock value in a stacked column chart per month. Now let's talk about loan payment calculations. This, again, you have to track separately on the Excel sheet, but it's pretty simple to do. An example is for a car payment. The columns you want to make are the month, the remaining car payment, the payment amount you do per month, and the remaining payment amount, which is simply the remaining car payment minus the payment amount. I'm going to leave this little table here to calculate car payments inside the spreadsheet for your flexibility to tweak around, but keep in mind that this type of table does not take into account interest payments, and that gets a bit more complicated, but for the sake of simplistic planning, just leave it as just the base amount of money you have to pay. And then if you're paying aggressively with, say, $1,500 per month, the amount of interest that you're going to accrue over the months is probably negligible as you near the full payment of your car. But again, this is all tracked separately. Tweak the spreadsheet to your needs. If you really want to keep track of the exact interest payment per month, this is beyond the scope of this video. You can probably look at other YouTube videos on how to do that. But this table, I'd say, works just fine, even if it doesn't calculate the amount of interest that you have to pay off. Some closing remarks and some advice I want to give to everybody before you tackle on this spreadsheet are the following. And again, I've used this spreadsheet for 2 years, so the best advice I can give to everybody is this. Be realistic and have some cushion in your budgeting. Overly aggressive and low budgets leads to disappointment, because if your budget's too low and you're consistently always exceeding it, you're going to, it's mentally discouraging to you. So be realistic with that budget that you set for yourself. Too high of a budget leads to less potential savings. If you know consistently that you're only spending $150 on food per month and you're setting your budgets to be $300, it's going to kind of tell you, mentally that, yeah, let's keep spending more money to hit that $300, So keep your budget in a way where it's almost conservative, but leave some flexibility and cushion in case where you have to spend a bit extra more on money. Say, you spent money on some more friends that you hanged out with. Next is to set your budget somewhat high for food and eating out with friends. Be flexible and have enough money saved up to enjoy life on a day-to-day basis. At the end of the day, the whole point of the spreadsheet is to help you save money and reach your financial goals. But you don't want the spreadsheet to kind of treat you in a way where you're like not enjoying life because you're like being too conservative with your spending. You want to enjoy your life where, if you want to hang out with friends spontaneously on a certain day, and you don't need to worry about too much money spending here and there, then set your budget a bit high. And this is the particular expense category that I highly recommend everybody to just set your budget high for. Everything else you could set a bit low, but if there's one thing you should set really high, but in a way where you can kind of save money at the same time, is for food and eating out with friends. All right, let's go ahead and start with a live example of how the spreadsheet works. It looks a bit complicated, but trust me, it's pretty simple. We're going to start off with our starting amounts. The yellow highlighted cells are areas that we're going to input values. The non-highlighted cells are formulas. In this case, for simplicity, we're only going to be working with just two accounts, checking and savings. We're going to have $5,000 and $3,000 for these two accounts. No money for the third account and fourth account. For stocks, we have contributed $4,000 to our stock brokerage account, say Robinhood. The total is calculated as the summation of the four bank accounts. It excludes the stocks because in the case where you put $4,000 in, but you made a terrible investment decision and your value of your stocks has now been reduced to $1,000, had you taken into account the $4,000 in your total value for your bank account, then you'll kind of be giving yourself a false sense of truth because, you're supposed to be less $3,000. So I only track this for the spreadsheet so that how much money you're cranking out to these external platforms. To know the true value of this, say if it went up or down, you would have to go and refer to your stock brokerage platform. Bi-weekly pay, how much you're getting paid every 2 weeks. In this case, we're going to work with $1,600, and you can declare what percentage of that payment goes into each of the accounts. In this case, for simplicity, we're going to do all 100% of the $1,600 goes straight to my checking. Now you could be flexible and say I want 75% to go to my checking and therefore 25% remaining going to my savings. It auto calculates for you. But again, we're going to undo that. Keep all 100% here. Now you don't have to work with the percentages. You can override this to just put straight up $1,600 and $0 here. Moving on, we're going to first start off with the first month. We're going to set down all the expense categories that we have. We're going to set all the baseline amount budgets. And then on our first pass of the spreadsheet, when we develop it, we're also going to transfer all of these values from the baseline into our projected amounts as well. So these two will match the first time you make the spreadsheet. However, as the months go by, your projected budgets will change. We're going to get into that in just a bit. So the first expense categories you want to make for every single month, starting with the first month, are your static monthly payments. These are payments that you have to pay every single month that you can't avoid, such as car gas, rent, the bills for utilities, groceries, and food and eating out with friends. And it could be some other stuff as well. Maybe a car payment if you have one. Again, your baseline amount for your budgets, $100 for gas. Rent, let's say, what's rent in the Bay Area nowadays? Pretty cheap, right? I'm just kidding. But we're going to work with $500. Internet, pretty reasonable numbers. After you set your expense categories, your static ones, on a per monthly basis, copy all 3 of these columns and paste them all the way downwards for all 12 months. I already had actuals put into the cell already. I'll get into that in just a bit. But the first time you do this, the actuals will be 0. All the way down. I'm going to get into that red text in just a bit. Okay, straightforward. We copied and pasted down all of our expense categories on a static monthly basis. Going back up now to January, this is where we're going to put our special expenses. These are expenses that I will say special because you pay them on a certain month and you know you're going to pay them on a certain month. For example, January, we took account to everything, nothing special happening there. We scroll down a bit and we see in June, I have to pay my car insurance every 6 months. I want to throw a big summer party in June. You know, it's the summer season. Set your budgets for these as normal, right? Going down, let's say I want to go to Vegas. I want to travel. Plane ticket, Airbnb, hotel room, food, and all that, $500, right? Set your budgets like normal. August, got to pay for school, car maintenance every 6 months or so, depending on your car. Get your budgets in for those. Nothing going on for special occasions for September. October, nothing. November, Thanksgiving party, right? Get your turkey and get your chicken wings and all that. Family dinner, food. December, Christmas season, car insurance, right? Christmas presents, Christmas party, get your budgets. This should be positive. Positive means you spent, and negative would mean that it's money coming into your system. Okay, so once you get all your special transactions in for your second pass, go back up, and this is when you start using the spreadsheet. Hypothetically, when you first start this off, everything will be 0, and your budget gets reduced as the month goes by as you start spending money. We're going to undo that. So on a realistic basis, say after the month ended, you have spent over here for, in particular, car gas. You paid for gas 4 times, $25, $22, $30, and $25. The summation of that, $102, you went over budget by $2. It's conditional formatted where it will turn red if you went over budget. If you were under, let's say you only paid gas 3 times, you drove less, right? You only paid $77 instead of $100, you saved $23. For this, you went overboard with food. For this, you went overboard with food and eating out with friends. In the comment section, you can explain what happened here. For gas, drove less. Groceries, you went to Costco and bought a lot of fish and drinks. For food and eating out with friends, you overspent due to a birthday party dinner with friends on January 15th, 2021. You didn't know it was happening. Your friend decided to invite you that week to enjoy dinner with them. And you paid for a lot of their drinks or something, right? So comments, you can put anything you want. In this, you planned to transfer into your savings account $1,000 from your checking account. Again, as you set your baseline and projected amount, it's the same. It actually happened. So you did really move $1,000 from your checking to your savings account. Your totals are all calculated here. Your total savings is shown here. You can see that we're red, so it shows that we did not save money this month of January. We have lost $177. So that's bad. And over here, you can put another comment to explain why you did not save money this month. You spent a lot of money on food with friends. That's the case. Groceries too, but a lot of it was for food over here. On the bottom here, all your totals for your bank account values are calculated. Then moving on. Nowadays, with COVID, everything's all fluctuating and different. What actually happened is, let's say we go to March, we ended up getting another stimulus check. Heck yeah. I don't know what that value is. I didn't know it was going to come in March. Didn't know we're going to get another one, right? So when it actually happened in March, we were notified. I usually color these special ones, the positives entering our bank account, as purple. You can color it with whatever you want. We ended up receiving an extra $1,400 again into our bank accounts. Any positives going into your bank account, you will type as a negative. Any spendings where you're spending money on food and whatever on your bills, you reflect that as a positive. Over here, I just overridden it. Instead of a summation on the top here, I just used a hard type value of negative 1,400. You could put equals sum, negative 1,400. It isn't necessary because this is a one-time deal. So you could just simply override that formula with just the value, negative 1,400. Yay! Then over here you can see we have saved $1,510, and then a reason why, received stimulus check. And then you could say when you received the stimulus check, received on 03/20. Pretty simple. Over here, we didn't plan to move money into our savings account when we first developed the spreadsheet, but what actually happened in March, I'll say due to our stimulus check money, we decided, you know what, we're going to move the extra money, $2,000, to our savings account. And we decided, you know what, we got a lot of money from that stimulus check. We're going to put some more money into stocks. So you moved $1,000. These two, remember, you left it blank because you didn't account for it before. That's okay. At first glance, it looks like, oh my gosh, like my spreadsheet's getting messed up now because I didn't plan for it, but something different happened from what I planned. That's okay. That's what the spreadsheet's supposed to be used for. And especially the comments, it helps you explain why things occur differently from what you planned. In this case, I didn't know a stimulus check was coming to us. It's a good thing for us, but stuff like this, these transfers, it's okay. And looking back at this data after the year progresses, you can look back and say, okay, maybe I should plan to move some money here and there to these different accounts in mid-month throughout the year. And again, this whole spreadsheet is to help you plan and explain transactions in an effective manner as you progress through the year. Now, this is where it gets a bit interesting. Let's say that for your food budget, you ended up not spending $100 per month, but you only spent $60. And I can tell you that's pretty unrealistic. Consistently, you notice that you've been spending $60, but your budget's been set really high at $150. And you're always saving around $90. So that means for the next month, you're going to be like, you know what? This gap is a bit too big. And I know I don't spend that much money on food anyways. This is where you modify your food budget. If you know you're going to spend around $60 that month, you can reduce this budget down to say $75. And then this will be $60. So now you have modified your budget after reflecting on how you did the previous month to a more reflective value that is still somewhat conservative and has a little cushion room. $15, maybe you could put this up to $80 to give yourself a little flexibility there. You reduced it, but also now you made your budget more realistic for yourself. So that's how you would go about modifying your projected amounts. Another example is, say, for rent. If you decided to move houses or apartments, say in July, July was the last month you're paying your $500 rent, and then starting August, you have to pay your new rent value. Unfortunately, that's where you can start changing your projected amount for your rent. Originally, you thought you're going to stay in the same place and that rent's going to stay the same at $500 in August. Unfortunately, not. You have to pay higher rent at your new place, $700. Therefore, $700 you have to spend. That's where you would modify your projected amounts to see how you did that previous month or because of changed circumstances. Maybe for the internet bill, I wanted to pay for higher speed. So now instead of paying $70 for some medium speed, I have to pay $100 because I like fast internet, right? And therefore, this value will be changed from 70 to 100. So there's many different cases on having to change your projected amounts. But again, projected amounts, you can modify these values for the following months afterwards, depending on either changed circumstances or better adjusting your budget to be more realistic. And that's pretty much all there is to it for how the spreadsheet works. In the next tab on the bottom for charts, we graph your overall data on your total bank account values for baseline, projected, and actuals, and your total savings are charted as well on this graph to the right side on a per month basis. And all the same data is all pasted at the bottom here for your convenience for each month. Another useful chart in this tab is the baseline, projected, and actual chart for each bank account. This tracks your checking, savings, and your two other bank accounts along with your stock contribution amount each month for baseline, projected, and actuals. This whole table is graphed on this right side graph over here. You can see color-coded, checking is blue, the red is your savings account, your third account and your fourth account are 0, so they're not shown here, and your stocks contribution is in green. Now when you look at this chart, you can see that in February, our checking amount for our actual got decreased. And then when we look at this overall chart, we can see that the reason for this decrease in our checking is because we put more money into our stocks. You can see the stock value, green, increased. Overall, you can see that the overall trend of our bank account for the year 2021 is slightly upwards, which is good. It means that at the end of the year in 2021, we have more money in our bank account overall. However, if our trend line is going downwards, that means we're losing money at the end of the year, and pretty much that's not good. I would be very concerned. As long as our bank account is moving upwards throughout time, we are happy campers. If it's not, and it's going downwards, something needs to change. Maybe your job isn't cutting it for you in terms of how much you're getting paid versus how much you're spending, or maybe you need to spend less money on certain things if possible. The last thing I want to talk about is the table that I included for everybody in this sheet to help you calculate your loan payments. In this case, it's going to be a car payment. You start off with your months, your remaining car payment, the payment amount per month, and the remaining payment amount, which is simply the difference between remaining car payment minus payment amount. In this particular example, we had to pay $28,000 left starting at the beginning of the year. We assume a monthly payment of $1,500. The formula gets dragged down, and we can see that we will fully pay off the car by July of 2022. In this case, you can see that we only had to pay $1,000 left, and we overpaid here. So in this case, when you're doing some long-range planning at this last month, you can easily say that you're going to pay less money. And there you go. $0 here. We will fully pay off the car by this month in the next year, and then we can go from there. Something I want to say is that this table does not take into account interest rates that are accrued throughout the months, which is typical for any type of loan. Now, what I can say is that for the simplicity of the spreadsheet, you don't really need to account for the interest rates here if you're paying aggressively $1,500 for this type of $28,000 remaining car payment. You're probably going to be off by, say, $100 to $200, maybe like $50. But if it really matters to you to track the interest rates to get exact numbers for the remaining car payments, that's beyond the scope of this video. You can look at other guides and tutorial videos on how to work the formulas to take into account that percentage rate for interest. But honestly, from using the spreadsheet, and for simplicity's sake, you don't need to take into account the interest rate. Now, probably for a home payment, that might matter, but something like this, if you're paying aggressively with this type of amount, it's probably negligible at that point, especially when you get near the finish line. If you have to end up paying, say, $1,150 instead of $1,000, it's not going to break you, honestly. So again, this is for simple long-range planning, a ballpark month that you know that you'll pay off your loan or your car, which is July 2022. And jumping forward throughout time, we are finally at the end of December, at the end of the year. We're about ready to tackle on the next year and make a new spreadsheet to manage our finances. You do the same thing, type up all your expense categories, your budgets, and then do the same thing over and over again. Now, if you just want to do some basic calculations to project how much money your account's going to grow throughout the year, you can see throughout each month the average amount of money you're bringing home on a monthly basis. In this case, it's consistently around $2,100. So then you can do a quick calculation. Our total bank account at the end of December is $15,000. Or if you want to work for the total amount of everything, $23,000. You add $2,100 to that 12 times. And then at the end of 2022, through a simple table calculation on the side, you can see how much money your total bank account is by the end of the next year. Pretty simple stuff. And you would just go ahead and do another fresh Excel sheet, do all your expense categories again, tweak your budgets. Maybe your biweekly pay got increased now to, say, I don't know, $1,700 because you got a pay raise. And let's say if you got a pay raise mid-year, you would have to manually adjust the formula to account for that slight change in your income. Again, the sheet is very flexible in terms of the calculations. Tweak wherever you need to. Reformat, recolor code things to your liking. The spreadsheet, again, is made to be very generic, but also flexible to allow you to do whatever you need to do to fully use the spreadsheet to meet your needs. And that's it for the spreadsheet. I wish everybody the best. Let me know if you have any questions, and I'll see you all next time. Peace out.